Hello everyone, welcome to our new Elliott Wave webinar. It's January 13th and this is your outlook for this week. Just let me know if everything is fine, please. I can see Sixit is here, Alexandria from Thailand is here. Hello guys. NS is here as well. So I assume that we are good to go. Just let me put my phone on airplane mode. Okay. So what's going on? As you know, US dollar is keeps moving to the upside, especially since last week when we got strong jobs data from the US. More importantly, the US yields are moving significantly to the upside. So obviously this strong data suggests that it's just another indication that Fed may really be on hold and that there can be fewer rate cuts. In fact, there were some new stories coming out that maybe they should even hike rates, okay, to prevent inflation to go too high. Keep in mind that we will get this inflation data from the US, PPI and CPI this week. CPI is expected on a yearly basis for 2.9. It's up from 2.7. More importantly, crude is also moving to the upside now. So it looks like that we have some serious indicators that is pointing for stronger inflation. So if Fed is really going to maybe to keep the rate steady or maybe even should hike them going forward, then of course it means that stocks will most likely stay under pressure while the US dollar will keep testing resistance levels. Now, from an Elliott wave perspective, firstly, I still have a very nice, beautiful ABC rally here now into this 61, 78.6%. So as I've been saying before, of course, this risk of can send the dollar even higher. So if you recall, I had actually two wave counts last Monday, and I said that it's premature to look for a potential top on the US dollar despite this drop, because we focus on some key levels, 107, and of course I didn't want to rush into some bearish dollar views just too soon. So what's happening right now? Well, I still think that there is a chance that we will see some top. Maybe still we will have to wait till Trump in a week or so when he will take office. Maybe that's when things could become much more interesting. Now the Biden administration is still making some very interesting decisions in final minutes. So I'm pretty sure that there will be interesting volatility going forward, and the dollar still can come to the downside. Now I want to highlight something. Don't forget, okay, what US dollar has done back in September of 2024. As you know, US dollar back then was extremely bearish, and then in September, mid of September, they finally cut the rates, first time in a while, and which was obviously widely expected. But what market did was it bottomed. Okay, we perfectly called an ending diagonal down here, and market reversed significantly to the upside. So now when everyone expects obviously that there will be maybe on hold or potentially even, who knows, they will hike rates, maybe when they will finally decide and confirm that they will be on hold, or maybe even surprised that they will hike rates, maybe again market will do the opposite, because a lot of these potential actions from the Fed is already priced in the markets. You will see that there is a very big gap here. Okay, wait. Here between US yields and Fed funds rates. So obviously a lot of potential new reactions can already be priced in. So no matter what Fed does, I still would not be surprised that dollar could maybe do the opposite from the crowd expectations. Okay, now an Elliott wave principle itself also suggests that we could be dealing here with the potential ending diagonal and could be running into these very late stages. So I would not be chasing dollar and the markets overall here, especially not with some short-term trades. But if we will see at any point this reversal significant to the downside in impulsive fashion, okay, then I think that we could see some very interesting early opportunities for potential shorts. But maybe I will be wrong. Maybe we won't get this sell-off that will allow us maybe to look for potential trades with smaller risk here. Okay, so we're just waiting what will happen this week. I think it could be quite important, quite decisive for potential turning point, and maybe this dollar itself won't go far till we get these US inflation numbers out. Now, since I mentioned US yields, maybe it's not a bad idea to look at the US notes. In our 2025 video outlook, I said that what's the ideal scenario for dollar to turn to the downside is that the 10-year US notes finally moves to a new low. Okay, so we are basically now testing these levels back from 2023, and the dollar is still, I mean, it's not necessarily the dollar will move beyond its own 2023 swing highs. So I still think that this can be a very late stages of this cycle, and that there can be a very strong reversal still happening this year, which will be easier obviously to move to look for potential top for the US dollar now when we are seeing prices down here in this fifth wave. If we take a look on euro dollar, obviously we are still moving to the downside. We are falling here lower into wave 5 of potential wave C, but still we are at the 61.8%. Again, very important level. Definitely it's the level where I would not be turning bearish. In fact, I would be on the watch list for potential rebound here, because I can see that everyone is now trying to call for parity or even for these 2022 levels once again. But I just don't believe that this is going to be that this start of a year will actually define the whole year. I think that there will be cycles in the meantime, and even if there would be some temporary recovery, I still think that we will get this bounce on the euro. Looking at cable is coming quite sharply to the downside. It's been one of the weakest last week, but notice that we are now coming into some very important support. We broke the first one here at 1.23 quite aggressively, so obviously we are going to attack the second one, which is much more important. It's 1.2 level. It's a round figure psychological level, and also if you are looking at this level as a potential support for a flat formation, okay, because that's much more important level than this one above, because whenever you are dealing with the flats, then wave C can come very close or even beyond this wave A swing lows here. So I think that again this one is also moving into some very interesting support levels. Even the second wave count, the different interpretations suggest that at some point we could see even just temporary bounce, but still a free wave rally could show up here for a wave B. I don't believe that we will just continue straight to the downside, even if we would see much more lower prices on cable, let's say at the end of this year. I still think that there will be a bounce. By the way, we also have, I see my notes here, we also have I think inflation data for UK as well, so watch this one. Dollar yen, as I said last week, that most likely we are going to see more upside here for a wave 5, so we were tracking this consolidation within uptrend. And what is happening right now? Well, notice that this pair is found some resistance, okay, despite higher US yields. Now this is a divergence. Where it is? Here it is. This is a divergence much better shown on this time frame. Okay, so you can see that there's positive correlation between US yields and the dollar yen, but US yields are keep moving to the upside, while dollar yen have some difficulties to move, to provide some strength here or gains. So I think that maybe we are completing this 5-wave rise, and that pair could even be headed maybe by the end of this week and try to retest this very important 156 levels. One of the reasons why obviously dollar yen is coming to the downside maybe could be also linked to BOG, but more importantly Japanese yen strength is seen because of the risk of flows. Okay, so maybe this divergence just explains how Japanese yen is strong for the last few sessions. If you look at some yen crosses, I'm sure that you will spot some interesting potential, even Elliott wave bearish structure there. But if the US yields in general, let's say that maybe they will find some resistance in the next few weeks if US dollar and US dollar would really turn to the downside, if more importantly US treasuries will complete this bearish cycle, then this dollar yen would fall even more aggressively if the US yields could come to the downside. Okay, if we will see this reversal, so if I illustrate this, if we see US yields suddenly coming back, then of course I would definitely expect the dollar yen would also do the same. So I think that any kind of a new recovery on dollar yen, I think that that could be limited. Even BOG will, I believe, won't like the rates, let's say above 160 or so, because they were doing quite and were trying to fight this level quite a lot last year. So I'm pretty sure that they could do the same if we approach this 160 level. Now looking at dollar CAD, dollar CAD is coming also very nicely to the upside. We have been tracking this ABC flat correction for a wave 4. We saw very nice support at this lower trend line support, and now it looks like that there's still room for some gains. So what I would be watching for is 145 or then maybe even 1.46 is the ideal resistance around the upper side of this impulse channel. So whenever we see this new highs, keep in mind that we could be, even in these commodity currencies, we could be moving into some late stages of the trend. If you look at Aussie, Kiwi, they're already potentially here on fifth wave. So again, another indications that maybe dollar may not be far from the potential resistance when I'm looking across the different charts here. Looking at the euro pound, I'm bringing attention to this one because firstly we had some very nice and beautiful reaction to the upside. Notice a broken wedge pattern. We've been tracking this wedge for a while, and now finally this one is recovering, and looks like that there can be much more upside, not only based on this wedge pattern, but also if you look at multi-year cycles. Okay, you can see that recently we came to the downside into the end of this cycle. Okay, right into this multi-year support level around 0.83. So I think that this is quite interesting one. It's the lower side of the range. I'm not saying that we will see any kind of a real move to the upside, but I realize that those crosses can be very tricky, but at least they could remain stuck in very big range. And since we are at the lower side of the range, I think that there is actually a recovery that we will see the move towards the upper side of the range. So maybe if the whole dollar story would really turn bearish for the US currency, then of course maybe euro dollar could be much more attractive on the long side compared to pound. Now, or maybe you will just stick and focus on euro pound now when dollar keeps moving to the upside. Now, earlier I mentioned Aussie yen, that's yen crosses, that some have potential interesting setups, and here is the one that I'm looking at. It's Aussie yen. Notice very nice ABC rally against the previous very strong decline. We stopped at the 61.8%, so you can see how the 61.8% can be important, especially when you have free wave movement into this level. So why I'm repeating this, because we had obviously the same level with wave C on the euro dollar that I discussed earlier. And now what we are seeing here is a break out of this corrective channel. So that's the first confirmation that ABC recovery has been finished. And more importantly, if you look and maybe scale to smaller time frames, you will also be able to define this recovery as a correction. Okay, even if you're not an Elliott wave analyst or not looking at tracking markets from these structures, you will still spot the potential bear flag here, and I'm sure that your targets obviously will be much lower than the current market price. So maybe just be aware that if dollar yen would really come to the downside, that if there would be some aggressive drop, maybe still caused by BOG, who knows, or maybe just a risk of lows, then this ASEAN and other similar crosses will do the same. Now let's take a look on the S&P 500. So I have been warning about this correction on the S&P 500. Firstly, we were looking for this wedge pattern ending diagonal. Then we had this thank you, Hassan, for being here and for your support as always. And then also we call this impulsive bearish reversal, then a consolidation, now a continuation to the downside. And obviously, first thing what happened here is Powell, as you know, delivered this hawkish cut in December. Then market went a bit of more sideways and choppy through holidays, but each rally was sold quite significantly because of the end of the year profit taking. Then market just went sideways here, muted for the first part of last week, and then we got another strong data, non-farm payroll report, and we see a continuation to the downside because this data is now just a confirmation of what market heard from Powell here in mid-December, when somehow he highlighted that the inflationary risk is still on the table because economy is doing quite well. So that's why we are seeing now another move to the downside. Now that's one thing. The next thing that I would like to focus on is this level here around 5,000, just below 5,800. I labeled it as a Trump trade stops. Why? Because that's when there were a lot of optimism going on, a lot of new inflows into stocks as soon as there were results that Trump won the US elections. So there must have been a lot of new potential traders that stepped into this market very, very late in this trend. Okay, so what market is doing right now is the market is trying to liquidate those that went into the market very, very late. So that's why I think that that's a very important level, because let's assume that your approach to stock market would be that you will buy some stocks, indexes, whatever, because Trump wins, because he is looking to support the economy with his plans, and obviously that should be the most important level, at least on the short-term basis. Okay, so what this market does right now, well, if it retraces towards these levels, I'm sure that there will be a lot of liquidations happening. And as you know, if there will be a lot of stops triggered in this uptrend from those who are long, then I think that that's actually the perfect time, the perfect area where we could see the first potential support. So if that would really be the case, and if we really will turn to the upside from that level after we clear these stops out, then I think that there could be maybe quite interesting reaction to the downside on a dollar itself as well. So I still think that the risk on or stocks in general are still in uptrend, and that could be maybe just a healthy pullback here. Now, when it comes to substructures or potential identifying the correct wave count within this pullback, maybe it's not easy because there are different ideas. Okay, so you can see that I labeled I have different interpretation. Maybe wave B has finished here, maybe here as a flat, maybe even here as a very thin triangle with a very small wave E. So for this week, I actually already prepared 3 different wave counts and interpretations that I will track we will track with our members. But overall, I just think that this level down here can be quite interesting. Okay, so I will be watching this level pretty closely. If we'll see some rebound from there, maybe let's say a sharp move to the downside and then a rebound, I think that would be quite interesting bullish reversal signal. If we'll just remain bearish here and won't spot any kind of a real bounce to the upside, then of course we'll just have to discover potential even lower support levels. Now yes, Alex, I think that you are referring to the S&P 500. Now what we have here, crude. So what's happening on crude oil? As you know, if you missed the headlines, Biden administration just confirmed new military support for Ukraine at the end of last week. Plus, there were new sanctions on Russia's oil industry. So that's why we are seeing crude oil moving to the upside. But then there were also some positive news that maybe Trump and Putin could really meet soon, and maybe this whole move could be retraced. Now, from a technical perspective, or just full Elliott wave perspective, we still see this as an ongoing range, and I still think that crude oil will see lower prices this week. Now, I firstly thought that maybe 74, 75 is the first resistance. We haven't seen any strong impulsive decline that will last for more than 24 hours. So obviously this current bullish leg is still in play here, but I would not be surprised if now we are finally dealing with a very strong and the most important resistance here of this range, because you have this trend line connected from September. If maybe this move was really all because of these recent events, then we know that when Trump will take office, we know that he wants lower energy prices because he understands that this could be good for economy. Then of course maybe this move will be retraced. So I will be watching still very closely if we get some sell-off here in impulsive fashion to confirm that the market is going to stay in this range, or potentially even turn to the downside. What I would be watching maybe on a smaller time frame here. Okay, let's say that this move out of this range has unfolded from a wave B triangle, and now I'm trying to define potential reversal zone. So that's the trend here, the trend line that is very important. And now what's very important maybe is to trying to label this 5-wave structure. So that's definitely the correct wave count as well here, to label it as a 5-wave movement, and you have very sharp move into the wave 5. But there's also an alternate scenario, okay, which we have to respect, especially when it comes to potential, let's say that you want to prepare yourself for potential trades going forward. So another interpretation is also valid, that what if that was wave 1, wave 2, and you're now in a wave 3, wave 4, and wave 5 will take us even higher. Well, in such case, I want to see, if I want to look for potential shorts, I want to see this wave count invalidated. Okay, so in such case, that's the price of invalidation. Okay, because we know that wave 4 must not trade into the territory of a wave 1. So if something that happens, we know that this wave count is invalid. So that's why I'm saying that it's very important maybe to keep an eye on confirmations. And if we'll see now from that daily trendline resistance a very sharp sell-off, and we see a daily close, and let's say that this reversal to the downside would suddenly last more than 1-2 days, and then you see an overlap with 75, then I think that you would have a confirmed top. But for now, as long as we are still not seeing this reversal, we must not rule out potential even for further upside here. Okay, but these are some interpretations and key levels that I'm trying to focus on, and that's why also in our member sections I always try to label our bearish levels, because I think that there can be quite important reversals if they are triggered. Now looking at gold. So gold, I think, is still in consolidation here. Ideally, as we discussed last time, it's wave B consolidation, and we will see wave C pushing down into wave 4 close to 2400. That would be ideal scenario. Okay, but I understand that wave 4 may not always be just a simple ABC structure. Okay, keep in mind that always when you have a deal, when you deal with a triangle, this triangle can be either in a wave B or can be on a wave 4. So maybe even this whole price action can be a wave 4 if we'll stay sideways here, let's say for the next month, 2 months. Okay, then this should also be considered, especially if metal will stay sideways here, and then you see dollars starting to turn to the downside. But for now, I just think it's too soon to say that maybe that's fourth wave triangle and that we will see a break to the upside. But of course, whenever we will see a move towards the lower side of this range here, towards 2630, I will pay a very close attention to that levels and see what happens there, because if that would be a bullish triangle, then of course these levels should be seen in the next few sessions. And if you ask me, and maybe try to analyze this rise from that low from mid of December, it's not really looking impulsive, especially not with the current sell-off from the 78.6%, okay, of this wave B. So I think that it's premature to look for potential uptrend continuation here on gold. I still think this will show up, but obviously it would be much easier for gold to rally when we are finally going to see dollar weakness. Okay. Okay, so that's for these markets. Now let's take a look on some cryptocurrencies. As you know, cryptocurrencies are in these pullbacks. I can see a lot of traders who are just following, especially maybe younger traders, are just looking at cryptocurrencies and just trying to define and find some support there. Support, some opportunities there. But keep in mind that all of the markets are linked. Okay, you have to understand what is driving the markets around. If you will see a very strong sell-off on stocks and very strong move to the upside on dollar, yes, cryptos at some point can still see move to the upside, but sooner or later even this market will reverse. And if you look closely here on this Nasdaq versus Bitcoin correlation, you can see that there was always on the same day we have seen this reversal to the downside. Okay, now when Nasdaq 100, when all of those indexes broke to the downside last week, it's not a surprise that we are seeing a continuation to the downside here now as well on cryptocurrencies. So that's why last time I said that we have to be aware of this wave C to the downside. It looks like that wave C is in progress, and I think that there is room for more weakness. We can see maybe 2.9 trillions. That would be the ideal support, or at the lower trend line of this corrective channel, because whenever you have a potential ongoing correction and you try to define the channel, of course you do not want to see wave C crossing too far or breaking too far away from that lower trend line support. You want to see a rebound from that area. Okay, so for now we are still not seeing a completed wave C, but you can see that all of the pieces of this puzzle of those all market cycles can come together. If, for example, dollar is really going to see that resistance, if stocks would really find a support around that level that I discussed earlier on the SP 500, then of course even cryptocurrencies could turn higher as well. But firstly, we obviously need a completion of these 5 waves down in that's a crypto total market cap. Also, what I would be watching for potential bottom formation on Bitcoin is, of course, watch exchange inflows. Maybe this sounds strange, but keep in mind that this is very important, because if there will be at these high levels a lot of inflows from private wallets to exchanges, it means that traders will give up, investors will give up on potential higher prices from Bitcoin. If this one will be moving even lower, of course they will want to protect some of the profits that they have made, not from November, but already from 2 years back. Okay, because cryptocurrencies are not in uptrend for only last 2 months or so, but they are in uptrend for more than 2 years. So if we'll see some more weakness here close to 80,000, I think that there will be even more fear involved. Obviously, there will be even more traders that will try to book some profits, maybe late, because obviously it's not easy always to go out at the highs. But if we'll see this exchange inflows spiking to the upside here, some higher reading, then this could indicate that some very big changes is happening, especially from a sentiment perspective, and when there would be a lot of traders, investors that will be selling into this sell-off, that's when we could be actually looking for the opposite reaction for the potential support. Another interesting observation could be maybe on short-term holders. Keep in mind that if there is level below 1, it means that short-term holders are profit are actually making are exiting positions with a loss. Okay, and you can see that each time when we had some interesting spikes to the downside, actually that's when the Bitcoin has bottomed. And so far I'm not seeing any kind of aggressive selling or liquidations from those short-term holders, but I think it could be quite interesting indications if we see spike to the downside that maybe Bitcoin is bottoming. And I've been sharing, if you will go to our resources and click on the free charts, you will be able, and I also shared this on Twitter, you will be able to see that I'm defined some kind of a average green line here of the recent spikes, which I think was quite attractive. Whenever we moved into this zone, that's when Bitcoin has seen some very nice rebound. Also, if we will look at this chart as well, it shows an increasing trend in value. That's here. It means more investors are beginning to be in loss, indicating a potential bottom. Okay, so if there will be in simple words, if there will be a lot of growth, let's say around 60% of holders in loss, it means that maybe we are closer to a bottom, because that's unfortunately how the market function. And so far still I think that there is room for more losses if we take a look or maybe compare current measures with the previous cycles here. So with that being said, maybe Bitcoin is not at their support yet. As I said, maybe 86, 85,000, that would be the first level to watch for. It's where wave C equals to wave A. Okay, but then you have also this gap on futures from start of November. Again, there will be a lot of massive liquidations if we are really going to see this level. So this whole zone is certainly a very important support, very key support for the whole crypto market. Okay, if we don't hold these levels, then I'm afraid that something else is happening. But for now, what we have to focus on is maybe on a subways of wave C. Whenever we will be able to count 5 subways down within wave C, maybe into this 86 level, then I think could be very interesting reversal for a potential bounce. If suddenly, let's say that market will just, I'm wrong, and maybe wave C is already close to support, and if suddenly we'll see this kind of a bounce and then close around 98,000 or so, especially if this recovery would be made in 5 waves, then who knows, maybe I will even try to label a completed wave 4, because certainly I want to discover some potential opportunities to catch this wave 5 with some shorter term trades if the price action would really allow me to label this as a potential completion for a wave 4. But for now, I just think it's still too early. Here's also Ethereum. You can see that this one is now falling quite aggressively. I've been saying weeks back, months back, that 3,000 for me is the very important support level, because clearly we haven't seen a break out of this range here. We are basically still staying in range, and even triangle still could be in the cards here. So 3,000 is maybe the first interesting support, but again, if you focus on C2A fib level, then I think that 2,800 around there should be even more important level, especially if we will be able to count 5 subwaves into this wave C. Then we'll know that market is in the late stages of this drop, because we know that after every 5 waves, market will try to stabilize, even if just temporary. Okay, so that's what we are looking at right now, expecting more weakness till this wave C is completed. Now looking maybe also an update on Ripple. This one has seen some move to the upside. If we draw this trend line, I firstly thought that maybe we'll see some support around 2.4, but looks like that we are falling back into this range, and since we haven't crossed this wave B swing high here, we can actually be still in a triangle. But overall, I like Ripple, how still holds up very well compared to others. So if Bitcoin will really and Ethereum will stabilize at lower prices, the supports that we identified, then maybe Ripple still has a chance maybe to even revisit this trend line, and ideally maybe the perfect support for a next turn to the upside. Okay traders, Thank you for watching this video. I can see that there were a lot of new visitors this time. So if you love our analysis, make sure to visit us at wavetraders.com and discover more of our updates, intraday updates on a daily basis. Also make sure to press a like, subscribe to our channel. If you're watching this recording later, please leave a comment below this video so that we will be higher on the list from algos. Okay, traders, thank you very much and have a wonderful week. Bye.